So, hi guys, very good evening, all of you. How are you? So, I hope all of you are having a great day. Welcome to this free seminar on companies auditors report order. So, Caro 2020 is applicable for the students writing CA intermediate and final examinations from this particular exam. Till the last exam, it was Caro 2016. From this exam onwards, it is Caro 2020. Okay, so before I start, I request all the students to keep your Zoom call in mute and your videos should be turned off. And for the benefit of the students who miss to attend this live session, we are recording this. I hope you're okay with that. Okay, so this is not actually an amendment. Caro 2016 is completely repealed off when Caro 2020 came into existence. To begin with, guys, first you need to understand what is Caro 2020, or rather what is Caro, Companies Auditors Report Order. So again, someone's mic is on. Okay, so I have, yep. Okay, so guys, it is very difficult for any faculty to complete topic like Caro 2020 in 1 hour, but I will genuinely try to do maximum justice for this 1 hour. If you are ready with your pen and paper, let us start. Okay, so we have to discuss two things here. One is the applicability. Even from applicability part of the Caro also, many times questions are asked both at CA intermediate level and at CA final level. For example, they'll take one private limited company, they'll give, this is the paid up share capital, this is the reserves, this is the turnover, these are the borrowings of the company. So is Caro applicable to this entity? Okay, so this kind of questions will come. This is part one, applicability. Part two is the detailed questionnaire consisting of that 12, 16, 20, whatever points are there. So skipping this applicability, we'll go to that ABCD part and then we'll come back to applicability. Now look here, this is first matter to be included in auditor's report. What is the first matter to be included in auditor's report? Property, plant and equipment. Old Caro, 2016 Caro, if you open, this will be fixed assets. Okay, so previously accounting standard 10 was fixed assets only, no? Now accounting standard 10 is property, plant and equipment. So since 2016-17, we, ICAI changed this accounting standard to be in line with IFRS. So the fixed asset is changed to property, plant and equipment. Then the second one is inventory, then loans and advances. But guys, I would request all of you to read to understand how the sentence is constructed. We are not understanding the content. We are trying to understand the nature. Whether the company is maintaining proper records, whether the property, plant and equipment have been physically verified, whether the title deeds of immovable properties, whether the company has revalued its property, whether, what the hell this is, whether any proceedings, whether physical verification, whether in the opinion of auditor, whether, and loans and advances, whether during the year, whether, why so much of focus on whether? It is not that whether, idiots, it is WHTHER, not WATHER. That means, guys, please try to understand all these are questions. So my dear friends, Caro is a questionnaire. Many people do not know this. Caro is a questionnaire. So the central government prepared a questionnaire. This is order. This is not part of Companies Act. This is order passed by central government. So the central government prepared a questionnaire and it is giving that questionnaire to the auditor. Like, central government called Pavan. Hey, Pavan, are you conducting statutory audit of these specified companies? Yes, sir. Then take this questionnaire, write the answers. So auditor has to answer these questions. But how will you answer? Not like a CPT student, ABCD, akkad bakkad Bombay bol, no. Your auditor, come on, dude, you're not CPT student. So because your auditor, what to do? Before answering to the question, you will have to go to your client company examine, inquire, observe, obtain the evidence, apply tests of controls, apply detailed, procedures, substantive procedures. So you have to check with your naked eye, you have to observe it, you have to inspect it, then you come back to your office, then you have to answer the question so that you will be giving this as a part of your audit report. Then central government will be happy. You understand? So basically, what is Caro? It is a questionnaire. Who has to fill this questionnaire? Auditor has to fill this questionnaire. You understand this? Now, applicability. There is no difference between applicability of Caro from 2016 to 2020. Whatever is there in 2016 applicability, same thing is there in 2020 Caro also. So there is no difference. So we will not spend much time on this, just we will run through. Now tell me one thing, do you think Caro is applicable for a foreign company having business in India? Guys, tell yes or no in the chat box. Do you think Caro is applicable to a foreign company? Whether Caro is applicable to a foreign company, yes or no? The answers are popping up. Everybody is saying yes. The answer is right. Yes. Do you think Caro is applicable to a banking company? For example, ICICI Bank Limited. ICICI Bank Limited is a banking company, right? So do you think ICICI Bank auditor has to fill Caro questionnaire answers? No. For them, another questionnaire is there. Another thing they need to submit to the regulatory authorities, RBI, LFAR. Okay, so for banking companies, Caro is not applicable. For insurance companies, Caro is not applicable. For companies licensed to operate under Section 8, companies not incorporated for profit, companies incorporated for promotion of arts, science, etc., etc. For those companies, Caro is not applicable. Small companies, one-person company, Caro is not applicable. So to all these companies, banking company, insurance company, Section 8 company, then one-person company, small company, for all these companies, exemption from the applicability of Caro is absolute. You don't need to satisfy any condition. Pavan sir, I'm a banking company. To me, whether Caro is applicable? No. No, no, full stop. There are no conditions. But my dear friend, if you are a private limited company, your exemption from the applicability is not absolute. It is subject to certain conditions. Now role play. One private limited company went to Caro. Sir, am I exempted from Caro, sir? Please tell me, sir. Now Caro is asking, hey, are you subsidiary company of any public company? No, sir. Are you holding company of any public company? Now Chintu get a doubt. What is the doubt? Can a private limited company be the holding company of a public limited company? Guys, there are two companies, one private company, one public company. Can private limited company be the holding company of public limited company? Say yes or no. Obviously, yes, nothing wrong. So guys, if you are a private limited company, to get exemption from Caro, first, you should not be subsidiary of a public limited company, or you should also not be holding company of a subsidiary company. That means basically you should not be part of any group where you have holdings or subsidiaries. That means individual standalone company, not having any parent, not having any child. So can we say that these are orphaned private limited companies? It is rude and mean to name these private limited companies as orphaned private limited companies. But as a student, to remember, you can use any visualization. So visualize in your mind that these are private limited companies which are orphaned. Oh my God, they don't have parent, they don't have child. Nice to remember. Then you have various conditions. What are the conditions? Now, Sai Kripa madam, can you read this F point for me, please? If you are there in the meeting, can you please read this?
Yes, sir. Sure.
Yes.
Sure, sir. A private limited company not being a subsidiary or holding company of a public company having First point, paid up capital and reserves a surplus not more than 1 crore rupees as on the balance sheet date. Second point, total borrowing not exceeding rupees 1 crore from any bank or financial institution at any point of time during the financial year. And third point, total revenue as disclosed in Schedule 3 to the Companies Act 2013, including reserve from discontinuing operations not exceeding rupees 10 crore during the financial year as per the financial statements.
So take pen and paper, guys, write down. If you are a private limited company, not being a subsidiary or holding of a public limited company, you have three conditions. Three conditions. One, your paid up capital and reserves must not be more than 1 crore. It can maximum be 1 crore. It cannot be more than 1 crore. That means 1 crore 1 rupees. If your paid up capital and reserves is 1 crore 1 rupees, welcome to Caro. Then second condition is total borrowings. Your borrowings shall not exceed 1 crore. Borrowings doesn't mean all the borrowings. Borrowings from banks, borrowings from financial institutions. Not all the borrowings. It is not overall debt. It is only loans from banks and financial institutions. 1 crore. But my dear friend, if you observe, there is a difference between first condition and second and third conditions. First condition is on the date of balance sheet. Second and third conditions during the financial year. That means for first condition, paid up capital and reserves, you will verify paid up capital and reserves on 31st March 2022 evening 5 o'clock when the shutter of the business is closed. 31st March 2022 when the shutter is closed. That is the point where you check condition 1. But condition 2 and 3, 1/4/2021 से लेके 31/3/2022 तक full year during the year. Pavan sir, in October my loans are 1 crore 20 lakhs, Pavan sir. But in November I repaid 50 lakhs, Pavan sir. So from December onwards, my loans and advances are only 70 lakhs, Pavan sir. 120 lakhs, repaid 50, only 70 is there. So on the date of balance sheet, what is your loans and advances? 70 lakhs. But my dear friend, it is not on the date of balance sheet. During the year, any point of time. So from April 1st से लेके 31st March तक, any day your loans and advances touched 1 crore above. 1 crore 1 rupee. Welcome to Caro. Welcome to Caro. This is condition 2. Condition 3. Total revenue as disclosed in Schedule 3. What is Schedule 3? P&L balance sheet pro formas. In P&L pro forma, if you remember, revenue, other income, both put together, total credit side of the P&L, total income we call total revenue. That including revenue from discontinuing operations, accounting standard 24, including revenue from discontinuing operations, whether your turnover has exceeded 10 crores. So you have 6 businesses. During the year, 1 business out of 6 businesses, which is textile retail, you do not want to continue, you sold it to another business. That is what we call, it can be demerger, it can be spin-off, it can be any type of sale, or it can be abandonment, it can be shutting down the division, whatever it is. Even the textile division revenue is there, no? That also should be included to check this 10 crores. You understand? Pavan sir, condition 1. Before condition 1, Pavan sir, I'm a private limited company. I don't have a holding, I don't have a subsidiary. Very good. Very good. Pavan sir, point number 2. My paid up capital and reserves is less than or equal to 1 crore. Very good. Pavan sir, total loans, borrowings from banks and financial institutions is also less than or equal to 1 year throughout the year. Very good. Pavan sir, my total revenue, including revenue from discontinuing operations as per Schedule 3 requirements of the Companies Act 2013 is equal to or less than 10 crores. Very good. Now that you cumulatively satisfied all the conditions, you don't need to comply with this Caro reporting. For that private limited company, Caro is exempted. Now you tell me, for example, this is one random example I'm giving you. Tata Technologies Private Limited. Tata Technologies is not a private limited, okay? Tata Technologies is a public limited. But for the classroom example, I'm telling you, Tata Technologies Private Limited, which is subsidiary of Tata Motors, having a share capital of 5 lakhs, reserves 2 lakhs, borrowings 10 lakhs, revenue 1 crore. Whether the auditor of Tata Technologies Private Limited should include Caro report also in his audit report, or Caro is exempted for this Tata Technologies Private Limited, you tell me. After that, we'll go to next part. Caro is applicable. Very good. Correct. Caro is applicable. Very good. Correct answer. Everybody, whatever your answers are correct. Okay. Now, matters to be included in the auditor's report. What is this? Matters to be included in the auditor's report. These are the matters to be included in the auditor's report. Now let us see what matters. A, property, plant and equipment. Okay. B, inventory. Okay. C, loans and advances. Okay. D, loans, investments, etc. Section 185, 186. Okay. Public deposits. E, cost records. F, statutory dues. G, unrecorded income. Where is A, B, C, D, E, F, G? Where is H? I came. Unrecorded income. Maybe that could be the problem with bulleting. Okay, don't worry about it. Then unrecorded income, Income Tax Act. Then repayment of loans. Then usage of term loans. Then fraud, notice of fraud. Then Nidhi company, related party transactions, internal audit, non-cash transactions, NBFC, cash losses, resignation of statutory auditor. Now, first of all, my dear friends, this particular material, whatever is there, this is going to be shared with all of you free of cost. I have already, forwarded this to the concerned administrator of this meeting. They will forward it to you, or after completion of this webinar, send a hi in WhatsApp. I will share it with you. No problem. Okay. Before we go and discuss further about at least some of the important side headings, guys, please try to understand in this property, plant and equipment, this is old point, but 1-2 additions are made. So as such, this matter property, plant and equipment is not new. This is old matter only. That means in Caro 2016 also this was there, but there are 2 new additions. For example, cost model, revaluation model, because this is amendment to accounting standard 10. After that, they included that here also. And Binami Transactions Act, you remember? Binami Transactions Prohibition Act, that also, they have included 2 parts. Inventory, same old point, nothing new. Loans and advances, same old point. Then loans, investments, same old point. Public deposits, as it is, copy paste. Cost records, old and new, copy paste. Statutory due, copy paste. Unrecorded income, put a star mark. New point. Unrecorded income. This was not there in Caro 2016. Especially for final students. Write down one more question. What are the propriety elements? What are the propriety elements in Caro? So you have one chapter, audit of public sector undertakings. In that, this is asked. And this is asked in the examinations also. So you should be very careful. What are propriety elements in company's auditor's report order. This is from public sector undertakings. Okay, audit of public sector undertakings. This question is there only for final students, not for inter students. Okay. For inter students, propriety audit is there as a part of government audit in your lecture 13, but that is not having any thing about Caro and all. Okay, so you are safe. Leave it. Unrecorded income is a new point. So let us focus more on the new points first. If time permits, then we'll go and discuss old points also. Okay, so before I started this seminar, in my mind, I assumed that you have already read Caro. If not 2020, at least 2016. Sir, I did not do any Caro, but I have one car, sir. Congratulations to you. God bless you. If you have seen Caro somewhere, some Caro, then this is for you. Okay, so like a regular batch, you cannot come like an empty cup. Okay. So chalo, anyway. So Sai Krupa madam, can you read this unrecorded income?
Yes, sir. Sure, sir.
Please.
Whether any transactions not recorded in the books of accounts have been surrendered or disclosed as income during the year in the tax assessments under the Income Tax Act 1961. If so, whether the previously unrecorded income has been properly recorded in the books of account during the year.
So could you please explain what this is, madam? Now you will tell who is the lecturer here.
Sir.
So central government, na, whether it is BJP government or Congress government or any other government, what they do, you know, I have seen this 3-4 times in my life. Maybe you might have seen once in your life. What they do is they come up with some scheme. What is the scheme, you know? Dear all shameless SSCs, we know that you have been suppressing income. You accumulated black money, shameless idiots. Now we are giving you an opportunity to come with your dirty clothes, dirty income tax records. We will give Lifebuoy liquid to you. Wash your hands, wash your clothes. Tide Safed will come to your clothes. Disclose the undisclosed income. Instead of penalties, prosecutions, penal interest, imprisonment, all these things we will waive. Come, voluntarily disclose. Pay the tax. Include that in your books. So black money will become white money in one day. Pay the tax. And if you do this, what is our offer? We are not going to prosecute you. You will not be put behind bars. Now, all these SSCs who have undisclosed income, they will put one mask, black color specs, one topi, okay, and put their face like this and go to income tax department. Sir, 200 crores, sir. Okay, sir, take this 40 crores as a tax, sir. Okay, sir, this 160 crores is white money now, sir. Go. So, my dear auditor, if you are conducting audit of a company and that company went to income tax department to avail this kind of bumper offer and they disclosed, sir, undisclosed income, sir. Now I am disclosing, sir. Then the auditor has to write it here so that shareholders will come to know. If you are not, if auditor is not writing this here, no, management directors went to income tax department, they did that, but common man, public, shareholder, investor, they never come to know this. So this is the point. Whether any transactions not recorded in the books of account have been surrendered by the management to the income tax department or disclosed as income during the year. If so, if this is done, whether previously unrecorded income is properly recorded in the books of account. So first point is the moral point of disclosing the fact to the shareholder. Second point is, being the auditor, I am more concerned about my books of account now. So you went, you disclosed, you surrendered, but After that, whether accounting is properly done, that I need to verify. That's all. So unrecorded income, guys, all of you understand unrecorded income? If you understand, can you please say yes in the chat box? Superb. So this repayment of loans is old point, uses of term loans is old point, fraud, important, put a star mark. Fraud, important, put a star mark. Guys, if you are a final student, this is much more important because this has connection with your professional ethics. In professional ethics, the failure of the auditor to communicate the misstatements, misrepresentation of the facts, second schedule, 5, 6, 7, first schedule. So you have this kind of non-disclosure of material facts, non-disclosure of material misstatements in the financial statements that has linked to failure of the duty as an auditor, professional ethics, professional misconduct, plus you have various things here. For example, in final, liabilities of auditor, civil liability, criminal liability is a separate chapter. In CA intermediate, fraud and responsibilities of auditor in this regard is chapter 5. That one, plus SA 240, plus Caro, plus section 113 subsection 12. Oh my God. How many points are there? So if there is a fraud in the books of account, if there is any fraud in the operations of the company, how many things as an auditor you need to take care? One side my professional ethics, one side my liabilities as the auditor, one side my SCA 240, one side Caro requirement, one side, this section 143 subsection 12 of the Companies Act. So though it is very easy to understand, still it is very important. Okay, whether any fraud by the company, oh my God, or any fraud on the company, that means company did fraud or company is the victim of fraud, has been reported or noticed. Wait, what? Student will ask. Student actually will not get this kind of doubts, okay? Because this kind of doubts will come only based on your quality of reading. Even if you read it 10 times also, you will not get the doubt. What is the fraud that is already reported, dude? Your external auditor. Someone already reported this fraud. Means who's that someone? Internal auditor or the management. So internal auditor or management already identified this fraud, noticed this fraud, reported this fraud. That report can be to the management, to those charged with governance, or to audit committee. Then if yes, that means if there is any fraud, the nature and amount involved should be indicated. Then whether any report under subsection 12, section 143 Companies Act, for both CA, final and inter students, this is important. Whether the auditor has given in form ADT 4 prescribed under rule 13 of the company's audit and auditors rules 2014. That means whether you have complied with 143.12 or no. Whether the auditor has considered, oh my God, who's this whistleblower? Corporate governance, audit committee and corporate governance. So there are whistleblowers who are the watchdogs. So if there is any watchdog in the company who is monitoring as a part of risk assessment procedures, as a part of ERM, enterprise risk management, if you are applying something like COSO framework, okay, or if you are applying 315, SCA 315. So in that, risk management is there, no? So you have appointed one person, Mr. A is our risk assessment manager, credit risk manager. So these kind of people are monitoring. When they are monitoring, they thought there could be some fraud here. Then they act like whistleblowers and they inform that there is some possible fraud. So whether the auditor has considered any whistleblower complaint. So is there any whistleblower who complained something to the auditor? If so, what you have done? What you have done? This is third point. So this fraud is also important. Nidhi company, since my childhood it is there. Even in 1988, Mao Caro, MAOCRO. Now it is Caro. Previously it is management and other Caro. Caro means company's auditors report order. Mao Caro means management and other company's auditors report order. So now it is Caro. Previously it is Mao Caro. Management and other company's auditors report order. Now what they have done is this, they removed. Whether it is manufacturing company, whether it is trading company, finance company, Caro is Caro. So since the old days, these points are there for Nidhi companies. Your net owned funds to deposit ratio must be 1:20 minimum. This both final students have studied, inter students have studied. In inter now, in advanced accounting, you have chapter 9 NBFC. In that also, you will calculate net owned funds. First problem is there no 240 answer. Sir, how you remember numbers also, sir? Because I teach now. That problem you will calculate net owned funds only, no? So net owned funds to deposits ratio minimum 1:20 is to be maintained. That is point number 1. Point number 2, 10% of your deposits, term deposits, should be kept in unencumbered securities. 10% of, whether the Nidhi company is maintaining 10% unencumbered term deposits. So what is your term deposits? Calculate. In that 10%, it is something similar to SLR, CRR requirements. Okay. SLR, every bank has to put money with RBI or in gold. So like that, Nidhi company also should calculate 10% of their deposits, and that money should be kept with some nationalized bank or approved securities. That's all. That is second point. Third point, where there has been whether there has been any default in payment of interest or deposits. If you are we have seen many NBFC frauds nowadays. Okay. If there is any NBFC which accepted deposit from public, but they fail to pay interest as per the contract or repayment of principal amount of the deposit, then the auditor has to write it in his audit report. You have to give the details. That's all. That's all. Then related party transactions. This is also LKG point only. Section 177, 188. Sir, what is section 177, sir? Hey, you tell me. What is section 177? I see how many of you know section 177. Hello, I'm looking at the chat. No one is telling. Idiots. Audit committee. Section 177 is audit committee. Okay, section 188, related party registers disclosures. So this is a normal point. There is nothing great. Whether all the transactions with related parties are in compliance with 177, that means have you informed the audit committee has taken the approval, and 188 of the Companies Act where applicable, and the details have been disclosed in financial statements. Details have been disclosed in financial statements. Here one accounting standard is there. You are going to tell which standard to me. Hello, which accounting standard? Sir, accounting standard 2384, sir. Correct. AS 18. Whether as per AS 18, you have disclosed this or not. Now, one general knowledge question for you. According to AS 18, how many related party relationships are there? You tell me. AS 18 includes how many types of relations? 10, 15, 6, 5. How many? 5. Correct. Excellent. Very good. Everybody is saying. Okay, so this is related party transactions. Internal audit, put a star mark. Put a star mark. So you need to read this internal audit in line with one section of the Companies Act. Which section, you tell me? Ta-da! 138, section 138 of the Companies Act. Previously, internal audit is purely voluntary, but now no more, my dear friend. For some companies, internal audit is also mandatory. Section 138 of the Companies Act. So here also one point they included. Whether the company has an internal audit system commensurate with the size and nature of its business. Commensurate means adequate. how strong your internal control system is, how strong your internal audit system is. The bigger the company, the stronger the system should be. For example, I was working as a consultant in one of the non-banking finance companies based out of Malaysia. Strongest internal controls till today I have seen, because they are applying for banking licenses, they have NBFC license, they are, international global payment gateway having tied up with American Express. So obviously they should have strongest of the internal control systems. They have one chief compliance officer who 24/7 sits only on control systems. So obviously if you are a bakery, or if you are a tea stall, or if you are a small retail shop, or if you are a this medical shop roadside, you will not have that strong internal control system. But the moment if you are a bank, if you are an insurance company, or if you are any public limited company, or if you are having this payment gateways, if you are into e-commerce, your internal controls and internal audit system should be strong. How strong it should be? It should be commensurate with the nature and size of the business. It should be commensurate with the nature and size of the business. Whether the reports of internal auditors, now you tell me, what is the frequency of internal auditors reporting? Internal auditors, will they give annual report, quarterly report, monthly report? How they do? External auditor, I know, only one report in a year. After completion of the year, they will conduct audit, they will give one audit report to shareholders. What about internal auditors? What about internal auditors? Hello, tell, what about internal auditors?
Internal auditors.
There is no rule as such. There is no rule as such. But in my experience, whatever I have seen the internal audit of ITC, I have seen internal audit of BATA, I have seen internal audit of many banks. Normally, it will be monthly reporting. It depends on the arrangement, but normally the management of the entity, the board of directors, will ask the internal auditor to submit monthly reports. You understand? So whether the reports of internal auditors for the period under audit were considered by the statutory auditor. I am statutory auditor. I received internal auditor's report. Internal auditor will not report me. Obviously, internal auditor will report to management. But I have to ask for the copy and I need to get it. So did I consider it? You have to consider, because there will be so many important areas in internal auditor's report. So that is your second point. So this is also one new addition in Caro. Non-cash transactions, this section 192 of the Companies Act 2013, this is there in the old Caro also. This is there in the old Caro also, nothing new, small point. This NBFCs, this is also small point. Cash losses, this is also old point. Now, resignation of statutory auditor, put a star mark, very, very, very important, especially for final. Professional ethics, communication with the previous auditor, ascertaining the reasons for resignation of the previous auditor, examining whether the process in which the casual vacancy is filled or the new auditor is appointed is legal, procedural, whether the company has complied with all the provisions and procedures of the Companies Act or no. You have to identify. Otherwise, professional misconduct. So what is the background? One statutory auditor resigned. Then in his place, I came. In his place, I came. What am I supposed to do? Whether there has been any resignation of statutory auditors during the year, which is a very big issue. Very big issue. If so, whether the auditor has taken into consideration the issues, objections, concerns raised by outgoing auditor. So who is giving this report? Incoming auditor. New auditor is giving this report. Because old auditor resigned, no? Why will he give Caro report after resignation? So you are new auditor. If you are new auditor, Caro is asking, Ray, dear Akshay, sir, tell me, sir, Pavan is predecessor auditor. Yes, sir. Pavan resigned. Yes, sir. Have you considered Pavan's issues with the company? Pavan's objections, Pavan's concerns? Sir, no, sir. Ray, come. You should speak with him first. You understand? That is this point. This is also new amendment. Put a star mark. So resignation of statutory auditors is a new point. Cash losses. What is the meaning of cash loss? Cash loss means you will prepare cash flow statement now. You will prepare cash flow statement. How many parts cash flow statement has? How many activities cash is included? 3. What are they? 1, 2, and 3. Cash flow from operations, cash flow from financing, cash flow from investing. Correct? In that 3, cash loss means cash flow from operations, which is negative. Cash loss means cash flow from operations that is negative, which is very bad. Which is very bad. Cash flow from financing activities is negative. Chalega, no problem. Pavan sir, I am conducting audit of one company. Pavan sir, they have negative cash flow from financing activities. Pavan sir, very bad. Pavan sir, yet try to understand. They are repaying loans. When they repay loans, cash outflow, which is good. Now student will think, oh, cash flow from financing activity, if it is negative, it is good thing. Yes. Pavan sir, what about investment, Pavan sir? Idiot, negative cash flow from investing activities is also good. Why? The company investing more and more money in non-current assets and investments. They are buying equity shares of other companies. They are buying properties. They are buying big, factories. They are buying non-current assets. Oh, if they are buying non-current assets, they will invest money. Okay. Then cash flow will be negative. Okay. But my dear friend, cash flow from operating activities, if it is negative, it is actually negative for the company. So negative cash flow from financing activities is actually positive to the company. Are you following my point? So as an auditor, you will have to verify whether the company is bleeding and leaking money from operating activities. You understand? So you have to tell this, whether the company has incurred cash losses in the financial year and immediately preceding financial year, this year and the previous year. If so, what is the amount of cash loss? Cash losses are considered to be much more severe and bad compared to accounting loss. Pavan sir, there is accounting loss. Net profit is negative 200 crores. Still okay. Cash losses are there, not okay. Not okay. You understand? So resignation over, cash losses over, NBFC over, non-cash transactions, sold one only, internal audit over, related party over, Nidhi company over, fraud over, uses of term loans. This is propriety element, repayment of loans, propriety element. So basically, guys, these 2 points are there, no? Repayment of loans and the next one, uses of term loans. Simple. Central government wants the management of the company to utilize the loans for the purpose they stated. For example, I went to State Bank of India. I asked them, can you please give me 2 crore rupees housing loan? They said, okay. I took 2 crore rupees housing loan. I bought shares of companies. With the 2 crores, I bought shares of companies. What is the loan? Housing loan. For what purpose it is used? To invest in shares. Can I do that? Guys, can I do that? Hello, tell me, can I do that? No. Actually, I'll tell you one funny thing, okay? SBI will never give 1 rupee of money also to me. They will straight send money to the seller of the property. I am buying property from some seller, no. State Bank of India will give money to Aparna Constructions. So I am buying flat from Aparna Constructions or Asset Homes. SBI will give money directly to them so that I will not misuse. You understand? Now, what if one company has taken 1,000 crore rupees of project finance? They are not using that for the project. Very bad. Very bad. So central government called the auditor. Ring, 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 ring. Then Pavan took the phone. Hello. Hello, this side central government. Sir, this side Pavan. Good morning, sir. Central government will say, Ray, you are conducting audit of X Limited. Yes, sir. X Limited has taken loans. Yes, sir. For what purpose they have taken loans? For what purpose they issued debentures? For what purpose they issued rights shares? For what purpose they issued, new equity shares? For what purpose they issued bonds? Whether it is a project finance or whether it is any loan or whether it is issue of any instrument, you will have to mention the purpose. For this purpose, I need loan. You should write it in loan proposal documents. For this purpose, I am issuing debentures. You need to write it in prospectus. So now the auditor has to verify what is the reason, purpose, why this company wanted this 1,000 crores. The moment that 1,000 crores came into the bank account of the company, what these people have done using this money, auditor has to open the bank account. Auditor has to verify the inflow of money and outflow of money. Oh, like this, they raised 1,000 crores. Very good. What they have done with 1,000 crores? So you want to start one power plant, and that is the reason you mobilize 1,000 crores. Now auditor will check bank account. Hey, to whom this 80 crores is paid? Sir, for this purpose, sir, construction material, sir. What is the purpose of buying this cement? Sir, for power plant only, sir. Okay, very good. Check. This 40 crores, to whom you paid? Sir, this is paid to Y Limited, sir. Why you have paid? We are buying iron and steel, sir. For what you used this project only, sir. You will go verify and say, okay, all this money is used for this purpose. That means there is no mismanagement of money, imprudence, or waste money. For example, Pavan sir, what do you mean by imprudence? What do you mean by not having the propriety? Simple. Can I buy a car on loan? The answer is yes. Can I take a car loan and buy a car? No problem in that. I have a credit card and my credit card limit is 10 lakhs. In reality, my credit card limit is 10 lakhs. Can I go to Maruti showroom, swipe my credit card and buy car? The answer is showroom owner will not have any problem. Showroom owner will absolutely not have any problem. He will say, yeah, please swipe your card. 7 lakh rupees car, you take it. Showroom guy is happy. But my credit card company will not be happy. Why, you know? Why, you know? My credit card company will call and ask one thing. Ray, nee rubber manda, idiot. Credit card bill you need to pay in 40 days. Car life is 7 years. How can you take a short-term loan and apply for long-term investment? Idiot. This shows a pure failure in financial management system of the company. Whenever a company is using short-term loans for long-term applications, their financial management is hopeless. They do not have enough funds, long-term funds in hand. That means they are already in crisis. Because you used credit card to buy car, after 40 days, beta zor se lagega. You will get a tight slap. Today, you don't have 7 lakhs to buy car, so you used credit card. Do you think after 40 days, you will have 7 lakhs of cash to repay that credit card? You will default there also. That is what repayment of loans is. So look here, whether funds raised on short-term basis have been utilized for long-term purposes. If yes, dear auditor, tell it in the report. You understand? Then another new word added to this Caro is Willful defaulter. Oh my God. You know, this willful defaulter word is there since the beginning, okay? But this word has become very fancy after Kingfisher case. Because Mr. Malia, when there is a default of payment of dues, Mr. Vijay Malia, he wrote a letter to State Bank of India to change the legal notice. In the legal notice, SBI said he is a willful defaulter. Vijay Malia's advocate asked SBI, change the wording. How can you say that my client is willful defaulter? He is a situational defaulter. So in the court, judge asked, are you kidding me? He is a situational defaulter. No. But actually, I respect that guy a lot. Okay. Even today, I respect that guy. I don't know why. Okay. So, whether the company is a willful defaulter and declared to be, stamp is there on the forehead, one tattoo SBI has put on your face, willful defaulter. Who will put this tattoo? Either a bank or a financial institution or any lender. If that happens, shareholders will never come to know. So imagine there is X Limited. There are 4 directors, ABCD. They took loan, defaulted, and there is a court case. The bank said that this X Limited is a willful defaulter. How shareholder of X Limited will come to know about this? Auditor will write an audit report whether the company is declared to be a willful defaulter. So I am writing this as an auditor in my audit report, which shareholder will read. Now shareholder, when he opens the audit report, oh my God, I have invested money in this company and they are willful defaulters. No, I'm not supposed to continue to be the shareholder of this company. Better, I will withdraw my money. I will sell my shares. I don't want to be associated with this kind of company. So this is auditor's duty. You understand? So this is about this loans and advances. Unrecorded income we have already studied. Statutory dues, cost records, all these things are old points only. Now for see, statutory dues, simple. There are 2 types of statutory dues, para A, para B. Para A, undisputed statutory due. Whether the company is regularly paying undisputed statutory due. What is a statutory due? Any money you need to pay, like, ESI, PF, gratuities, sales tax, GST, income tax, any amount which you need to pay as per a statute. That is called statutory due. There are 2 types of statutory dues. This side, undisputed statutory due. This side, disputed statutory due. If it is undisputed statutory due, whether the company is regular in paying. For example, TDS deducted should be paid before 7th of next month or 7th of quarter. GST should be paid before 10th of so and so, so and so. So whether the company is actually paying statutory dues as per the dates given in the statute or not. If they are due for a period of 6 months or more on the date of balance sheet, auditor will prepare a box in audit report. This statutory due 2 crores is to be paid on this day, due for 7 months, and the company has not yet paid. Like that, you prepare a table. If it is this side, this is undisputed, this is disputed statutory due. Disputed statutory due, auditor has to mention what is the dispute, why the dispute is, what is the amount involved in the dispute, where the dispute is pending, which forum. Is it National Company Law Tribunal? Is it Income Tax Appellate Tribunal? Or is it any court? Or is it any authority where the dispute is pending? Is it Commissioner Appeals? That you need to write. That is about statutory dues. Cost records, section 148. If the central government has ordered by order, central government will never request you. What is this? Are we studying the company's auditor's report request? No, company's auditor's report order, government order. It cannot be government request. It is government order. Okay, so central government by way of an order asked one group of companies. companies operating in cement manufacturing, companies operating in manufacturing of lithium batteries for electric vehicles, companies operating in with, this chemical processing, they have to maintain cost records. This is the order. Now, you are the auditor of company. Yes. You are conducting audit of X Limited. Yes. X Limited is manufacturing batteries. Yes. So section 148 subsection 1, whatever the order central government has given to maintain the books of account, that is applicable to X Limited. Now, whether X Limited is maintaining cost records. Yes. But my dear friends, especially final students, remember, it is not the responsibility of the auditor to verify true and fair cost of production. That is the donkey job of cost auditor. Who am I? Financial auditor. What will I do? I will ask, dear company, whether there is any order on you to maintain books of account. Yes, sir. So are you maintaining cost records? Yes, sir. Show me. This is cost. Oh, this is cost records. So am I verifying the contents? No, this is cost records. Okay. The company is maintaining cost records. Enough. So as statutory auditor, even if Caro is applicable, you will not verify cost records. You will just verify whether the company is maintaining cost records or not. The company is maintaining cost records, full stop. The company is not maintaining cost records, full stop. That is cost records. On this, there is one previously asked question as well. Then this public deposits, section 73, 74, 75, 76 of the Companies Act and all, this is old provision only. Simple. If you are accepting public deposits, have you complied with the legal provisions? Have you complied with RBI guidelines? Yes, sir. Very good. If you have not complied, what is the non-compliance? If you have not complied with relevant provisions, court or NCLT or old CLB, company law board, might have given some order, whether you complied with that order or not. That is what this point is. This is public deposits. Then this loans and advances, single line. In respect of loans, investments, guarantees and security, whether provisions of section 185, 186 of the Companies Act have been complied with. If not, give the details. Sir, what is 185, 186, sir? Hello? Any idea what is section 185, 186? No company is allowed to give any loans, advances, either by way of a book entry or any other manner, or give any guarantee to directors or to the entities where directors are related. So the firms and companies where directors are into management or key managerial personnel. So if my company X Limited has a director, Mr. A, who is also MD of another company or who is holding control or significant influence in another company, I neither should give loan to this Mr. A, nor I should give loan to a firm or company in which A is interested. There are exceptions for that. Pavan sir, after passing a special resolution, after complying with the procedure, within the limits prescribed in the Act, can I give loan? The answer is yes. So the auditor will verify whether the company has given any loans to directors or related parties. If so, what is the limit? Whether a special resolution is passed in the shareholders meeting, the auditor has to verify. That is the point. You understand? Then loans and advances. This is normal point. This is there since the beginning of the Caro. Even in Mao Caro 1988 also this is there. Okay, not a great point. Now, inventory. 3 things you need to remember. Physical verification. You tell me whose responsibility it is to verify physically the inventory. Is it auditor responsibility or management responsibility? You tell me. Management. As an auditor, what you are supposed to do? Guys, do you know there is one standard in auditing on this? So let me check. Do you know there is a standard auditing on this? SA, bolo number. Excellent. 501. Correct. SCA 501. SCA 501. SCA 501 has 4 parts. In that 4 parts, first one is physical verification of inventory. What is stated in SCA 501? Did it say, dear auditor, verify inventory physically? Or did it say, where the physical verification of inventory has been carried on by management, dear Mr. Auditor, observe. Do I need to observe management doing physical verification, or shall I go and do? You tell me. I am auditor. Shall I observe when management is doing, or shall I go and do the donkey job? Observe. So whether the management is carrying on physical verification at reasonable intervals, whether in the opinion of the auditor, the coverage, the procedures, that means the process, the manner in which the physical verification is done is appropriate or no. And if there are any discrepancies which are material, what is discrepancy? Difference between book balance and physical balance. In the books, raw material X 55 kgs is there. Physical verification, I found it 22 kgs. In the books, 55 kgs. Physically 22 kgs. I have to go and ask, are you kidding me? What is this balance 55 kgs? What is this physical balance 22 kgs? That is called discrepancy between books and physical balance. If it is 10% or more, underline, put a star mark, new amendment. If it is 10% or more, for each class of inventory, category A, category B, what is class of inventory? Raw material, work in progress, finished goods, loose tools, stores, and spares. These are classes. So if there is 10% or more discrepancy, how it has been dealt with in the books of account? Dear company, did you create a provision for loss of stock? How you have accounted for? In your books, it is 55 kg. Reality, I have seen 22 kgs. How you have dealt with the same? Who is responsible for this? Accounting, that auditor has to verify. Then third point, whether during any point of time of the year, put a star mark, amendment, the company has been sanctioned working capital in excess of 5 crore rupees, underline 5 crores. From whom? It can be from bank, it can be from financial institute. How working capital loans will be given? Working capital loans will be given based on a hypothecation or security on the current assets. Correct? So current assets is the security. Now, when you take a working capital loan showing your current asset as a security, what are you supposed to do? You need to submit quarterly statements with the bank. But some companies will not do that. If you are auditor, you have to go to the management and say, dear shameless X Limited management, you took 15 crore rupees from ICICI Bank. They asked you to submit statements. Did you furnish statement? Go, give it first, or I will write it in Caro. Now, when you have given statements, now what these people will do, you know, some companies, I'm not saying everybody will do that. Some companies will inflate stock 22 crores. 22 crore stock is not there. But if you reduce stock balance, now your working capital limit comes down. So the company has given 22 crores inventory. The auditor has to verify this point. Whether the quarterly returns or statements are filed by the company and whether these are in agreement with the books of account. Oh my God. That means if your company has a working capital limit from a bank or any financial institution, you have a working capital loan of more than 5 crores, which is secured against the current assets. When you are submitting stock statements and schedules to the bank, the auditor will come and verify what is the statement you have submitted, what is the actual amount in books of account. If there is anything wrong, he will mention that in the Caro report. New point, star mark. About property, plant and equipment. First point, everything is copy paste of old one with the 2 new points. What are 2 new points? If the company has revalued any of the property, plant and equipment, revaluation model, and the increase or decrease in the value is more than 10% of the asset balance, 10% is considered to be materiality level here. The auditor has to mention that the company revalued and these are the details. Then the next point is Binami Transactions Prohibition Act. So here, whether the company is maintaining proper records, same old point. Whether the management is doing physical verification at reasonable intervals, same old points. Discrepancies noticed, how they are dealt with in the books of account. For discrepancies, inventory 10% is there, fixed assets 10% is not there. Please observe inventory, especially final students. Inventory, second point, discrepancy between book balance and physical balance, more than 10% for every class of asset, every class of inventory. That is in second point. First point, discrepancies noticed, material discrepancies. So here Caro gave the, Caro gave it to the discretion of the auditor. If I am auditor, I can consider 3% to be material, 2% to be material, 8% to be material, 10% to be material. So here, material discrepancy. Auditor, up to you, my dear auditor. Then, title deeds of immobile property are in the name of the company. Now, guys, tell me one thing. I'm conducting audit of a company. Company is having an immobile property. In the balance sheet, it is there. Factory, 280 crores. But the factory is not registered on the name of the company. Is it okay? Can it happen? Guys, can it happen? Tell me fast. Let me see. Bank loan. No, here actually the focus is not on the bank loan. The focus is not on the bank loan. The focus is on leased property, finance lease. You could have taken finance lease, no? So if there is an immobile property where you occupy that as a lessee, if the nature of lease is finance lease, either you follow Ind AS 116 or Accounting Standard 19, substance over form, though title deeds are not in your name, though you are not the legal owner, accounting will allow you to recognize the asset in books. You understand? That is this. Then revaluation of property, I told you. Revaluation of PPE, change is 10% or more. Either it could be upward or downward. Then you need to report. Then Binami transactions. This Caro 2020 is over. How is our IPL T2020 match? Okay, so guys, can I say with this happily, proudly that we have completed the whole Caro 2020? So if you have any doubts, I am open now for questions and answers. If you do not have doubts, we are done for the day.